Firstly, it's a Friday. Take us through the movement on the bourse and how it ended today.
Thanks for having me, Fenly. After 5 consecutive days of gains, we saw the all-share index dip 0.75% to close at 22,332 today. Volumes also dipped about 18% to close at 432 million, while activity was mainly driven by banking stocks. Of all stocks traded, 30 stocks gained, 43 lost, and 54 traded flat. Among the top gainers were Intercontinental Bank, NACO, and BACO. Among the top losers were Eternal Hall, Costain, and Better Glass.
And what is your forecast for the capital market next week?
What we saw today, we believe, was the dip today was precipitated by profit takers in the market. We think this may continue for the first few days of next week before the rally resumes. That said, this rally we believe is a very timid rally, and you have a lot of investors that have been scattered in the market and remain very jittery. So whatever rally that does occur will remain fragile.
Big news out of next week, expecting the CBN to announce the banking sector audit. What exactly is the market expecting out of that audit?
We think 2 scenarios may play out. Scenario 1, in which CBN releases the results of the audit and there are no casualties, by which we mean no banks are taking over, no CEOs are fired. This scenario, we believe, may have been already priced into the market. That said, we do believe if this is the case, we should see a positive jolt in market sentiment. In scenario 2, they release the result and you have a lot of bloodshed and you have CEOs fired. In that case, we would definitely see a run on the stocks of affected banks, while that negative mood we expect to infect the entire market.
Do you get a sense that investors are a little bit apprehensive about this audit results coming out?
Certainly apprehensive, no. Most investors believe we would have a no casualty situation. This sentiment really has been, in a sense, fired up by the CBN itself. But we have a CBN regime that is very market savvy at the moment, and they've learned from the first episode. So what we feel is most investors are in favor of scenario 1, in which case you don't have any casualties, and that may have already been priced into the market. But if that does happen, you would see the cloud of uncertainty that has beset the banking sector recede, and you would see a positive sentiment. We don't think it's going to be a catalyst to a 20% gain in the ASI over 3 months, no. But we do think it's going to add up to the improving fundamentals that is driving the current rally.
All right, let's take a look at results out of flour mills. Their full year results came out. We're looking at a scenario where the company's turnover has definitely increased from last year, but profit after tax has decreased. Why?
Yeah, profit after tax dipped a very hefty 39%. While our business analysts are still on the case of the company trying to dig out more information, we believe this may not be unconnected. This may be connected to the exchange losses suffered during the sharp devaluation of the Naira last quarter of 2008. We are still digging up more on that company, but that's our take on it. As you also know, net margins also dipped by over 50% to 2.2% roughly. So it does seem that while the company is aggressively pursuing its growth strategy, it's not navigating those risks inherent in any growth strategy properly. It remains to be seen if it would be a successful growth story. Of course, they dominate their niche market, and scale is in their favor. But it's also a very leveraged company that runs on short-term lending from banks. So we think the outlook, right, the operating environment, may be tilting towards stable for flour mills.
And also the cost of the company's fixed asset has increased compared to last year at a time when companies should be cutting down on their costs. Well, why is the company's fixed assets increasing?
It's an asset intensive business, and when you're pursuing growth, certain costs will come in. A big part of that is, of course, the acquisition cost that feeds into your fixed assets. So we think the increase in fixed asset cost is as a result of its aggressive growth strategy that has seen it of recent trying to wrap up the acquisition of another flour mills in Ibadan. So, yeah, that's our take on that.